Hi guys, this is Jimmy G, and this is lesson 2 on zones. Now, in the previous lesson we went over support and resistance lines. Now, as you can see here, that some of these lines are quite close together, so these could be called zones. Right, so what I'm going to be doing now, I'm going to be looking where price has hit it quite a lot, and I'm going to count this as my zone. So whenever price is going to enter into this zone, I'll be looking for a sell. Either have pending orders around this area, or looking for some kind of price action, or when it comes back down, I'll be into that trade. Depends on how price acts, which I will cover in further lessons. Right, so looking at the charts, immediately I can see that this zone here, which I'm going to color in gray, this represents a good zone for taking any calls. Well, long trades, long positions. So if price was to come all the way down here, look, it's came up quite a lot. This came down no more than 50 pips. So, or from the bottom of the zone, bottom of the zone no more than 55 pips once, but usually no more than 20 pips. So you could, depends on your risk, you could take these trades. Right, so the zones, this is one zone I'm looking for at the moment. I can see clearly there's been a zone up here, so I can draw it from this area. So you're trying to hit as many areas of rejection as possible after you've drawn your lines. So I'm going to count this as a zone, and these zones you don't want it more than 50 pips, right? Or you can have small zones. It's like a 27 pip zone. You can make it bigger if you want. It could be touching this one. It's up to yourself. And I can see there's another zone which is here. You can see after you've drawn your support and resistance lines, you can look for your zones. And this zone is 23 pips. Alright, now you can see there's another zone here. See, it's only been there for a brief period of time. So I'm going to draw another zone here. That's my other zone. Right. You can see here it's been rejected down. Here it's been bouncing, playing around, and then it was rejected to the upside twice, and then down to the downside. So it's not played in this area much. Like, it's been rejected, like a steep rejection from this area. So this is a high probability setup. Right, let me make that zone a bit bigger. Zoom out more. You can make it. You can do this. Rectangle properties, and you can put your parameters to further in the future. So I can put it until July, right? And I could put this one, just move it into July. I'm a bit confused on American dates and things. Let's project it into July. And let me zoom out a bit more. Right, so you can have a look where all the zones are happening. You can take your cursor and be looking for points of rejection. So it looks like this could be another secondary zone, which is touching this other zone. So it's not so great, but just so you know, you could take a 20, like a low stop loss, and then you're prepared for the next zone. So yeah, actually that looks, for some reason, this looks like a valid zone. Can make it as short as possible. Yep, here. Right, so that's less than 50 pips, and between these two zones, there's only a 20 pip movement. So you could wait, you could trade this zone, or you could wait for the next zone, or anyway, if it's to come up, you could wait for it to confirm to come back above this zone to take it. Like for price to, well, I can go over this another lesson, but I'll just quickly go over it. This one, price to like come up and then bounce off this zone to the upside, like using other tools that I'll go over in further lessons. Let's just focus on zones at the moment. You can see another zone is here, yep, here to here, 20 pip zone. So add the zone from, looks like from here, just trying to adjust it. Right, how many pips is that? Yeah, very normally maybe 20 pip zone. You can see right along. It's been 23 pip zone, that's fine. There's another area of rejection. It's been rotated to the upside or downside. Just so, but you have other things on your charts later. But I'm just going to quickly go over the zones. So you'll be looking, make sure it's not too a big movement, at least 50 pip or 80 pip movements away from other ones. So that's a 200 pip movement. Between these, there's another little zone. See here, it's been rejected down, 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 down. And so I'm going to take another zone here, top here, to here. So right, just draw it. So I'm using, the reason I'm drawing this one to there is that price touches this. See, this was, it came up from here, bounced up, it was rejected here, fell back down, came into the zone, reject back down, came above this zone, and then zoomed up this zone. It just bounced off this zone to the upside. Then it crashed back down through this zone, I don't know why. Could have been something, and then see, it played around this zone. So it did like a zigzag pattern, zig up to the upside. And you see this zone is always valid. So this is another zone that you could add to your charts. So price could like bounce from these zones to the next zone. So basically, if the way you can understand how the zones work is that price will go from here to this zone here, and after it's in this zone, it will either come back down to the next zone, or it will go up to the above the zone. So you don't know these zones. I mean, you don't know what price will do, but you could just guess because your reward, you can see to the upside, is 61 pips or above. You know, if you trail or stuff. But to the downside, it's a potential movement of 127 pips or more. So the reward to risk is good to trade. I mean, you could, if you had a trade, and then you had your stop loss of say 40 pips or 50 pips, you know, you would be stopped out for 50 pips if it went to the upside. But if you went down, you would have made like over 100 pips. So it's a good reward to risk. Or if you wanted 20 pips even stop loss, you would be stopped out sometimes, but other times you would make over 120 pips. Or to the upside, it's at 60 pips. Or more. Depends how fast it goes. Depends how strong the movement to the upside is. So, like, after a bounce in this zone, I got maybe stopped out, took another trade from this zone to the upside. Then when it hits this zone, you don't know is it going to come back down again, or it might go up to the other zone, which it did. See, big movement up to upside, and then where it's going to go, it's either going to go down again or go up. So it goes to the next zone. It just smashed through this zone basically, and then went up to here, came back down. Now it could have went back up again, or it could have went down to the next zone, which it did. Played around, broke out this zone to the next zone. So this could be your profit taking zone as well. So if you came down to this zone, you could put a stop loss, protected stop loss somewhere above this zone. So if it, then you could take it to the next zone down below, which you could have. This is how zones work. Price will either will bounce from zone to zone, and each time it hits a zone, it's either going to go up or down. And these zones are good places to take trades, like to the upside or downside. You just choose which way you want to go and trade it. Flip a coin, it's up to you. Or if you see some kind of analysis that's going to go up, then you can take that trade. But I'll go over that in further lessons. Okay, this is Jimmy G, and this is trading within zones.